right, Aditya Khemka is joining us now. He's fund manager in Incred Asset Management and tracks the space very, very closely. Aditya, great to have you on, especially on a day when, we've had so much action come in over the last couple of days, 48 hours or so on companies, and you can help us break it down. Let's start with Biocon, Lupin, Jubilant, because these are the ones which have seen action in the last few days. Do you think that these are big negatives for these companies?
So good morning and thanks for having me. To begin with, let's talk about Biocon. I think Biocon's Malaysia facility is really important for them. It's a facility that can produce insulin and other products. It's a facility where they've done very meaningful capex, and if the USFDA observations escalate, it would be a difficult issue with Biocon. They will probably not be able to show significant earnings growth, which is expected out of them as of now. And that will create a problem for the company's stock price and future earnings growth trajectory. On Jubilant Pharma, I think the facility is insignificant in the scheme of things. The facility was already under OAI, so another sort of OAI label on the facility doesn't change anything for them. So I don't see any significant impact on Jubilant Pharma from the impact that they had. Lupin, again, they have so many facilities and so many of their ANDAs are sort of diversified across facilities. I would imagine very limited impact on Lupin's, revenue trajectory and margins trajectory because of this issue.
Okay. Standard disclosures, of course, viewers, keep in mind, it's just just a view and not a buy, sell, hold recommendation from Aditya. Aditya, great having you. Thanks for joining in Neeraj here. So, Aditya, just a broad talking point, do you reckon the USFDA scrutiny has intensified in the recent times? Are companies doing something wrong, or is this a normal cycle which follows because at times lapses may happen? How do you read into this?
So I don't think the USFDA scrutiny is intensified or otherwise. I think it's a regular act of the regulator. They have to keep auditing these facilities from time to time. I think the problem really lies, Neeraj, in the economics. So the end market is not giving you good pricing, good margins, and the regulator is sort of increasing the bar for compliance time and again. And if the companies sort of, do the whole compliance bit, maybe the cost economics don't work out. And hence, maybe at some level, I'm not blaming the top management or the company's promoters or something like that. I'm just saying at some level, people just take shortcuts to, sort of keep the cost low or accelerate the dispatch of material or production lines or whatever. And I think that sort of gets caught in the net with the USFDA because they don't like people taking shortcuts. They like to be thorough with the processes. And I think that has forever been the case with Indian pharma now. I think for about 10, 12 years, we have seen this now. It's disheartening. But again, the only way out of this is to keep training, to keep sort of your personnel updated about the regulations, to keep training them, and that's the only way out of it.
Would you say that some of these businesses have had the recent developments and over the weekend? So I thought that Lupin's Pithampur facility was a key one for its US supplies, but I heard you say that Lupin has ANDA spread across, and therefore it may not be as big as would it be safe to say it's not as damaging?
Yeah, that's correct. I think majority of Lupin's ANDAs have dual filing sites. At least that's what they tell us. So, even if let's say this facility were to come under a warning letter or something like that, Lupin would probably be able to get the approval of those ANDAs from alternate sites.
Okay. So, Aditya, thanks for this first piece of information on this. The other one is this whole passage of the Biosecure Act and how people took a bit of a liking. But I thought it was long drawn. I was talking to Sinjin and they mentioned that there is nothing in the near term that's going to happen. How do you look at this? Is it one of the many things, or is it really a big material development for Indian CDMO players?
So look, it's a material development from the standpoint that it gives the stance of the Western countries and Western companies towards Chinese suppliers. From that context, it is material. From that intent, it is material. But for the pharma companies of India, which have the potential of replacing those Chinese suppliers, it's going to take time. Pharma is a regulated sector, Neeraj. You have dossiers, you have so many files and so many compliances to be met before you can produce the first commercial batch. I mean, it can take 2 to 3 years sometimes just to get the filing transferred from a Chinese CDMO or to add an Indian CDMO to a Chinese CDMO product. So it's a long drawn process. So I understand the street's enthusiasm at this point in time, but I think a lot of the future growth in some of these companies is getting discounted in their current valuations, which makes us slightly uncomfortable. Because if then the growth falters for even a year or two, maybe sometimes even just a couple of quarters, we have a lot of volatility in stock prices, which obviously investors do not like.
Aditya, just among the lot that we've spoken about, and let's get some of those picks in, because you had one more news in the pharma space recently, which was the CDSCO saying that the quality checks that they usually conduct saw some very key brands and very popular brands not passing muster. And then you had various, some companies coming in saying that this is not ours. Then there was a version saying that these are not made it to market yet. Is this quality check business going to become a problem? If yes, for which companies?
So I think, look, if you look at the Indian pharma market, there are close to 16,000 companies that sell products in India, under their labels. And there are many, many, many contract manufacturers. I think it turns into, again, tens of thousands of contract manufacturers. But there are only 3, 4, 5 large contract manufacturers who account for a substantial portion of the market. And a lot of the good companies that we talk about, a lot of the large companies that we talk about, they either manufacture their product themselves or they outsource to these 3, 4, 5 large CDMO players, where I don't expect any quality issues to emerge out of those 4, 5 CDMO players, because these are WHO GMP certified players and all of their facilities are WHO GMP audited. So they are not sort of probably going to fail on that. Remember, WHO GMP is not as not as difficult to pass as, let's say, a USFDA inspection. The rules are relatively more relaxed. So I think from that standpoint, I wouldn't believe that many of these large pharma companies that we invest in or we talk about, they will have issues with their product quality. So I am inclined to believe when they say that some of our brands which have been sampled by the CDSCO and flagged off as substandard isn't really our product. It is a spurious product which was being labeled as our product. India has the problem of spurious drugs for a very long time. It is our regulators, it is whose job it is to figure out where those spurious drugs come from and to stop the flow. So if you're finding substandard drugs, it is probably the next step to take is to find the origin of the substandard drug. Is it the company that owns the brand, or is it just a spurious company which is putting the brand on the product? So I don't think this is going to be an everlasting situation. I think this is just a blip, and there are definitely spurious drugs available which sell under the popular brands. And it is up to the regulators to figure out how and where that happens and to sort of plug the loophole there.
I'm just wondering, Aditya, if you've been tracking what PB Fintech is doing. And I know it's an insurance company, you don't really track that. But we spoke with Yashish this morning, and his concept of HMO to solve a problem of insurance as well as hospitalization bills for the individual, as well as, conflict of interest. Insurance company wants lesser bills, hospital wants higher bills. Do you see any real impact if this takes off for hospitals, another space that you do track?
So look, I think this is a new trend we are observing. So we are observing PB Fintech talking about opening a hospital. We are also observing Narayana Hrudayalaya talking about opening a health insurance arm. So sort of a new trend where we are noticing that these companies want to integrate between insurance and hospital space. On the face of it, in the near to medium term, doesn't seem like a good idea, because for an insurer to run a hospital is a different animal altogether. And similarly, for a hospital company to run an insurance arm, again, sort of a different animal altogether. It will definitely have implications in terms of their near-term.
Aditya, sorry, yeah. Aditya, may I just, so Yashish Daya said that they are not going to run that business. They said it's an investment into that business, could have investment from other insurers as well, but it is a separate unit and it's an investment from them. But I think the question that probably Tamanna was trying to ask, but let me ask my version of it as well, maybe Tamanna will agree with that, is that if indeed there is interest aligned between an insurance business and a hospital business, one hospital or set of 7, 8 hospitals, which Yashish Daya was saying, can it have an impact on the existing hospitals wherein there is a conflict between the hospital and the insurance company? So
I actually don't agree with the premise there. I don't think there is a conflict of interest between the hospital and the insurance company. Okay. You may think it's about the bills. I am thinking it's more about the volumes. So if an insurance company gets a good rate negotiated with the hospital and can send patients their way, can ensure higher occupancy, the model works.
Okay. So okay, let's talk a bit about the hospitals space and the outlook that we're seeing over there. You know, is that looking robust now going into the rest of the financial year?
Absolutely. So I think hospitals for the past 4-5 years have done phenomenally well in terms of ARPOB growth and occupancy growth. We don't see the trend changing anytime soon. So we expect all hospitals companies to come out with sort of low teen to mid teen top line and slightly higher bottom line growth throughout this fiscal. And that's sort of a significant growth number given that the overall Nifty 50 earnings grew 9% in 1Q FY25. So you clearly have a subsector within the market which is growing significantly faster than the broader market index.
All right. Thank you so much for coming in and speaking with us, Aditya Khemka.